Good morning and welcome to the Forex Daily Update, brought to you by Pepperstone on Monday the 25th of March 2019. I'm Darren Sinden and you can follow me throughout the day on Twitter by using @ds_Pepperstone. Okay, let's kick off as ever with a look at the overnight changes and the price moves to be aware of, but of course it's a Monday, so we'll look at things from a weekly standpoint. First of all, a couple of points to make at the top of the table. Both the euro and the pound sterling giving ground over the course of the last 7 days against the US dollar. The euro falling back by 0.28%, sterling slipping back by 0.44%. Of course, the fortune to the British pound very much tied up with Brexit, and there'll be more developments on that over the coming week, I'm sure. A bit of a difference of opinion as far as direction was concerned in the Australasian currencies. The Australian dollar falling by 0.28% over the course of the week against its US counterpart, whilst the Kiwi added 0.44% against the US dollar over the last 7 days. The dollar was on the front foot as well against the Canadian dollar, or loonie, up by 0.69% over the course of the last 7 days, and it fared even better against the Brazilian real. As you can see here, it's adding 2.45% over the course of the week after a very strong day on Friday, and that added to gains for the month of 4.27%. Dollar index for all that, though, pretty much unchanged, 0.08% to the good over the course of the last week, and that's perhaps surprising given the moves we saw in other markets on Friday. Let's see where the dollar index heads off this week. Okay, what's on the calendar then? Events that may move the markets today. Well, it's a pretty busy calendar, although not too much in the way of high impact data, but we've already had this morning a speech by Fed member Evans. We had at 04:30 GMT all industrial activity index data out of Japan for the month of January. Another disappointing read there for Shinzo Abe and the Bank of Japan. We've had another speech from Fed member Evans. He's been a busy boy. He also spoke again at 5 a.m. GMT this morning. And then at 06:30, Bank of Japan's Harada took to the podium to speak as well. Data coming up at 9 a.m. we'll have the IFO expectations, current assessment and business climate data for the month of March out of Germany. And given that it was poor PMI data out of Germany that set the ball rolling on Friday, it will be very interesting to see what German economic watchers are thinking and feeling about their economy at the moment. At 10:30 GMT, another central banker speech, this time from Fed member Harker. And then at 12:30, the first of two regional Fed activity indices in the shape of the Chicago Fed National Activity Index data for February. And that's followed 2 hours later at 14:30 by the Dallas Fed Manufacturing Business Index for March. So a chance here to get a look at how two regional economies are faring in the USA. At 16:30, we'll have 3- and 6-month T-bill auctions out of the US. Again, it'll be very interesting to see how the market's prepared to pay up for US paper, given Friday's moves in the bond market. And at 20:30, our final central banker speech, at this time from the RBA member Ellis. At 21:45, we stay in the Pacific, cross over to New Zealand for balance of trade data for the month of February. And then at 23:50, we should have corporate service price data and the Bank of Japan's summary of opinions report. Okay then, breaking news and comment that's caught my eye overnight. And first of all, equities fell and bond prices rose on Friday as concerns about global growth reappeared. Moves in the US government bond market appeared to suggest a recession was possible in the USA during 2019 or 2020. Staying with America, Special Counsel Robert Mueller found no evidence that Donald Trump or his close aides collaborated with Russia in the 2016 election. That's a brief summary of Mr. Mueller's report that he's now submitted to the US Attorney General, who will decide if there are any further charges to be brought against anybody mentioned in that report. Meanwhile, New Zealand PMI Jacinda Arden flies to Beijing to meet President Xi today, amid fears about worsening relations between New Zealand and their largest trading partner, and that comment from the FT. Okay then, food for thought and something to take away with you into the trading day and beyond. Why not think about this? Look at a couple of charts that will, to my mind anyway, speak to investor sentiment. First of all then, the chart over here on the right, the volume of cumulative fund flows into technology-related funds, according to the Bank of America Merrill Lynch flow show indicator. And what we've seen is obviously a large amount of money flowing into those tech and growth stocks during 2017 and throughout 2018. But look what's happened since then. A sharp reversal of fortune and money coming out of tech and growth stocks, as far at least as institutional investors are concerned. Retail money may have replaced that, but that's a big warning sign that maybe that growth and momentum story is beginning to fade, and perhaps that's what we saw on Friday. And the trigger really, perhaps for some of that sell-off on Friday, can be seen in this chart here over on the left, which plots the 2-year bond yield and 10-year bond yields of the US against each other. And what we can see here, the 10-year bond yield on Friday falling very sharply indeed. In fact, falling faster than the 2-year bond yield, hence the potential for the inversion of the yield curve and the suggestion that there are recessionary pressures in the USA. Just to be clear, when bond yields fall, it means their prices are rising and that money's flowing into risk-averse assets, and that's certainly what we saw on Friday. Okay, it's risk warning time. Trading CFDs and foreign exchange on margin can be a risky business. If you're uncertain about those risks or the suitability of leveraged products for you, then please do contact your Pepperstone account representatives. And as I always say, in fact, please do take the time to read this risk warning thoroughly. Thank you very much for your time today.